We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in returns for to smash that like button, tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY. It allows us to see the pre-market and after hours, and we're going to talk about the S&P 500 index as well, the 10-year treasury, and what's going on and what to expect throughout this week's volatility. Now, today our SPY bot, which we just released, and it sends us direct messages over at the Discord, sent us a bull indicator at around 1 p.m. and those call options took off nearly 50% plus. And shortly after, we got a bear indicator in the last few minutes of the day, and those put options went up nearly 80% plus, guys. It's our new release. We're taking advantage of the notifications it sends us to have an advantage and an edge over the markets within the volatility to maximize on opportunities while we receive the clarity we deserve, and you can receive that as well. The link is down below to the 42 vision indicators to receive the clarity and maximize on opportunities, no matter which direction the SPY or stocks are going. Now, the SPY has been consolidating, right? After pulling back and jumping up, jumping down, it's just been sitting sideways. We're going to break it all down in today's video. But before we do, I want to share with you guys the opportunity I mentioned this morning. And if you guys want to get on early with us every single morning, check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with the S&P 500 index, 10-year treasury, the NASDAQ as well. We'll look over it and what's going on in the overall market. So the opportunity I mentioned this morning turned out to be phenomenal and beyond expectations, and it missed home run territory by 1%, guys. If you guys want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord, and by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So this is the one stock I was watching this morning, PHUN, and how it performed was beyond expectations. We caught this one in the pre-market. As it was pulling upwards, it jumped up nearly 5 to 10% in a matter of minutes, and then it pulled back down and continued to jump up between 5 to 10%, consolidated for a few hours, but from the moment we mentioned it to its dip to the highest point, it gave 19% plus, guys. It nearly reached home run territory and missed it by 1%. If you guys want to get on early with us, we strive for opportunities like these every single day. Check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with these charts. So here we are with the SPY, and as we saw on February 2nd, things peaked. Facebook reported earnings, things started to fall, and then in the aftermarket hours, Amazon came and made things look like it was going to continue to run and go higher. Everyone was excited. Friday, things fell, came back up, and basically did a V shape and sat sideways from the point before aftermarket hours, and then aftermarket hours the next day on Friday. And today, small V shape and sitting sideways again. If we continue in this type of sideways action within this volatility, there's an underlying issue that's not allowing the SPY to go ahead and go higher, right? It's actually just sitting sideways. So the underlying issue is bigger than just stocks. We do have some mid-cap earnings that are going to be super important this week as well. And then we have a specific important data coming out this week, which we're going to cover here in this video. And I'm going to talk about supports, resistance, and what I'm watching within the SPY, the S&P 500 index. We'll even touch base on the NASDAQ. And let's pull up Ultimate 42 Vision. And you can now gain access to the bull and bear indicators as well. The link is down below in the description to the 42 vision indicator and Ultimate 42 vision to receive the clarity you deserve within the volatility of the markets to maximize on the opportunities no matter which direction stocks are going. So if you look at the SPY here on the 30-minute, obviously it's a lot more volatile. But if I pull up the 4-hour, you could see it got a bull indicator down here at 439. It went to highs recently of 457, 458. Rejected it, and we haven't gotten a bear indicator. That's the first thing I'm watching here within this volatility on the 4-hour, and the same thing here on the 1 day we did get a bull indicator, and I stated we need to watch if this is a setup for the next bull run or a big fake out, as we've seen and compared in the previous history of the charts, right? I always go back here to 2020 crash, how we got that bear indicator, things pulled downwards, there was a fake out, no bull indicator popped up though, and things continue to go lower. That's how I was able to see, right, with 42 vision as the bars change colors, as well as the bear and bull indicators, to be able to see the fake out here and not get caught up in this bull trap, because no bull indicator popped up. We were under a bear indicator, we were going back into extreme weakness, and it continued to go lower. Now the bull indicator did not pop up until later on in April, and it lasted until the next bear indicator in June, right? And things just continued forward. Now, this time around, I was watching to see if a bull indicator did pop up, but if it came with strength. This one is not coming with strength. The last bull indicator we got was in October. It went to dark green, it went to green, and lasted all the way up towards the peak here in December. We've been going downwards, and right now this bull indicator is signifying strength within that time frame and this specific bar, but we're now pulling right back to it, and we're kind of just breaking even. So the question is this the setup to go ahead and break out again higher, or is this going to continue to kind of consolidate and go back into weakness, and we're going to get another bear indicator? This is going to be negated, and that was a fake out, because one of the metrics that I'm watching apart from the 1 day is the 1 week. As you could see it here, it's under a bear indicator. Now for 2 weeks, it's trying to reverse. We'll have to see if this bull indicator is stronger on the 1 day, or is this a short-term jump, or is this bear indicator the fake out? But these bear indicators do not pop up every single day, and when they do, they last for several bars. Now right now, it's lasted for 3 bars. Even though it's trying to reverse right back up, it started up here at 458, and right now we're at 448. So that is important to be aware of, and the lowest point was 420. We've bounced off that area. But if you look at the history from the last 3 times it's come up in 2018, over here as well towards the end of the year, going to 2019, and the 2020 crash, it will last several weeks to several months at a time. So right now it is dominating, and if this continues to curvature right back up and go higher, and no bull indicator pops up along the way below it as it's reversing, I am going to continue to watch this carefully and be cautious, because it could all be a big bull trap. We still have to see how inflation numbers are going to look in this month, going into next month, as well as the rate hikes that everyone's anticipating to start next month based off what the Fed said, right? They can change their mind, but that's what they said in the last meeting. We'll have to see how things play out. But right now, when you zoom in into more volatile state, this is where I'm going to be watching if a bear indicator pops up, because then that means that we are reversing back from hitting these highs here of 458 and pulling right back down with strength by the bears, dominating, and outflows outweighing the inflows. That's going to be important. But what's the main thing pulling this downwards, even though all these earnings are coming out and having an effect on it, and also pulling downwards the NASDAQ just as fast, right? What is it? What is it that's pulling down the S&P 500 index, the NASDAQ, in the same direction pretty fast, and no one's talking about it actually, and I've talked about it over the weekend, and it's important. It has to do with rate hikes, guys. The rate hikes has an effect on the 10-year treasury, and the higher these yields go, that's the more anticipation of higher rates that the market's trying to price in through the bond and 10-year treasuries. Okay, super important. I've stated in my previous videos, if we go back 1 month, things have gone up from lows here of 1.77 all the way to 1.92. If we go back 3 months, we were at about 1.44, and we're all the way up to this level here, a total of almost 20%, 30% rise. And I've stated we could possibly even touch 2% or even break through it, right? And that can create even more fear the faster this goes up. And if you look here, it started rising on the 2nd all the way until now, rapidly from 1.76 to 1.93, almost 10% in just a matter of like 2 to 3 days. So it is important to realize that the underlying, right, that no one's really paying attention to, if this continues to spike up rapidly, it could actually create fear in the markets. It could actually start alarming investors. And a lot of investors are probably even ignoring this right now. They're not even paying attention to it. You want to be aware of this and not be caught by surprise. Now, another thing as well that is coming up this week is CPI data, core CPI and CPI. If both of these or either of these come out higher than expected, which is 0.50, 0.50, that is going to be alarming. A lot of people are expecting it to be higher, and that could create turbulence in the market for the rest of the week, going into the next week, or even the rest of the month. It's going to be super important to pay attention to this and pay close attention to what the Fed is going to react to this in the near future, because this is going to let us know what the Fed has to deal with, what they're going up against, and what they're going to have to plan for moving forward. As always, guys, I'm going to be watching 42 Vision very closely. We're still under a bear indicator on the 1 week. If that changes back into a bull indicator and there's some strength here, I will be watching that as well. And as always, guys, thank you guys so much for watching, and let's make some money.